think the world really is in an economic crisis, and we have to look at serious ways in which we can get out of the crisis. As a journalist, I'm here to find out for myself exactly what role the IMF can play in helping in the economic crisis. Then I think that will better enable me to relate that information to my audience.
I come to the spring meetings obviously to meet world leaders, to present our case. I come from Africa, sub-Saharan Africa, where all issues are going for us. You've got malaria there, you've got HIV and AIDS, you've got poverty. Africa has been growing for many years, many decades, and yet poverty is still rampant.
If I talk only about Bangladesh, what is happening, I don't know what is happening in Chad, and I don't know what is happening somewhere in Burundi. So this is the platform to bring all those good experiences, models, what works and what doesn't.
It is an opportunity for us to talk to the policymakers. It's an opportunity to talk to the IMF staff that prepares a lot of the reports like the Global Financial Stability Report that we look at very closely.
Headlines on Greece dominated the meetings.
We're not expecting anyone to do the job for us. We will do the difficult things. We are going to be the ones that reduce expenditure, that find ways to increase revenue, that put the economy back on a sustainable path, that do the difficult tax and tax reform, pension reform, public administration reform, labor market reforms. We will be doing that.
How to bring about a lasting recovery worldwide was also a big topic.
The aftermath of this crisis has left a fiscal burden, a debt burden, and also a very lingering high unemployment rate.
How to get out of this stimulus mode to the ordinary situation is very difficult. Whether to do the exit in monetary first or exit in fiscal first, and make sure that you don't get back to the crisis and double-dip recession.
The crisis happened at a time when most of the African countries were growing at a good rate consistently. And then the crisis came and took away all the gains that were made by growth. And now we're having to start all over again.
Financial sector taxation was another item under discussion.
It's certainly not a way to reduce risk. It is a way to raise revenue for a government, but it's certainly not a way to reduce risk. So I think you have to really look at what are the objectives of the tax.
The banking sector caused this crisis. The banking sector needs to pay to mop it up. We want this tax to raise hundreds of billions of dollars, part of which would then go to developing countries.
To say that a punitive tax is the solution to this is hardly going to increase credit and flow to the economy.
If you're a poor person in Mali, you don't even have a pension. You don't have any access to these kind of welfare provisions.
I think there are some issues with financial transactions taxes. After all, the financial system is the grease that makes everything else go. But on the other hand, given the losses that have been sustained because of the banks, I find it difficult to argue too much.
Though everyone may not agree, the meetings provide a forum for people to make their voices heard.
Matters of finance are often very difficult for some people to understand, and it could be intimidating. And when you hear talk about the budget, about fiscal deficit and things like that, and if you can break it down in real terms, it could help remove that cloud, and then people can understand and make an informed opinion.
We see a lot of willingness both from the World Bank and the IMF, even at the topmost leadership level, willingness to listen, willingness to offer solutions and answers to the questions that we have.
You're never going to be able to get everybody on board 100%, but people can be more flexible and understanding if they at least understand who you are and where you come from.